How's it going, everybody? It's Stas here, and in this video, we're going to be talking about the stock market, breaking down what happened today in the S&P, the Dow, and the NASDAQ, and I also want to share with you guys the top stocks and ETFs that I'm watching and looking to trade as we're getting deeper into the month of May here in 2020. And many of these stocks, many of these companies actually just reported earnings today, so we're actually going to break down a bunch of earnings reports in this video, and as always, I'm going to be sharing with you all what I personally did in the markets, what I've been doing, and kind of some thoughts that I have here moving forward. So if you guys enjoy the video, as always, hit that like button for me, consider subscribing to the channel if you haven't done so already, and feel free to join our Strive Smart Discord chat and our Facebook group, linked down below in the description box. Those are 100% free of charge to join. So right off the bat, we can see here the S&P 500 ended up going up $25.70, up almost 1% on the day, up 0.9% to be exact. And another thing we noticed right off the bat is the S&P struggled in general here, guys, at this level of resistance from back in the beginning of March. You guys can see here, and kind of towards the end of February as well. This is the first point of resistance that I'm seeing here. You can see back then we held generally 2,900 here, 2,880 as a support, and today you guys can see, and especially on the 5-day, 5-minute, we pretty much got rejected exactly at 2,900. And mind you, 2,900 was also a resistance from a couple days back on the 28th of April. As we tried breaking above it, we failed maintaining it on this day, and we ultimately dropped under it. So that also makes it a key level of resistance for the S&P as of right now. So it's clear the markets struggled there, and if we notice on the intraday chart, it was a pretty slow day. The big move, or rather the majority of the move, came in the gap up here pre-market. You guys can see we closed yesterday at 28.42. We gapped up to 28.70-ish, and from there, yeah, we did have about a 28-point rally up to almost 2,900, but ultimately it was a slow coasting day before the dump off, which again gave me kind of the technical sign that, okay, 2,900 is a very strong level of resistance. So from the bullish perspective here, that is a level we need to see break on the S&P, and also you can see on the 4-hour chart here, we're under the 180 SMA, and we're squeezing in this wedge again. Notice we're in, under 2,900, obviously, and we're also uptrending at the same time with the underlying support here being at around 28.50. So at some point we're going to see a direction in the S&P. Tomorrow, honestly is going to be a huge day here in my opinion to see whether or not we're breaking out of this wedge, to the upside or to the downside. So that's kind of what I'm looking at here moving forward when it comes down to this market and the markets in general. And judging on some futures action here, it seems like the NASDAQ is up after hours. It seems like the S&P is up a little bit. The Dow Jones is up a little bit. So we might actually break to the upside tomorrow. So only time will tell, obviously, and I'd love to know your opinions down below. But that's kind of the rundown on the S&P 500. The Dow Jones today up 133 points, up 0.56%. And just like the S&P, guys, we're trending right under this 180 simple moving average here on the 4-hour chart. And let me delete this trend line here because it's kind of confusing. But if we go back overall, it seems like the Dow is maintaining its uptrend as of right now. But ultimately, I would like to see it squeeze out of this 180 SMA, test 24,700 again, and break into the 25K level before it's really continuing its uptrend, obviously. And at that point, it would be at a higher high, and the bulls would be in full force if we're trending above the overall moving averages here. And when it comes to the NASDAQ, yet again, another strong day in tech today, guys. Up 1.09%, might as well call it 1.1% here, up about 100 points on the day. And technically speaking here, guys, very strong day on the NASDAQ because we closed above and we broke above in general a key level here. And if you guys have been watching my videos, I've been talking about 8,900 to 9,000. That's been a very strong level of resistance, and although we didn't fully break above 9,000, you guys can see we struggled right around the peak from a couple of days ago. The fact that we held it as a support and we held it heading into the close, that's a strong enough sign for me. And you guys can clearly see, this uptrend is intact. So tomorrow, from a bullish perspective here, I'm looking to see, do we break out of this general 9,030 level of resistance where we peaked at today and a couple days ago? If we do, we could see another high here in the short term on the NASDAQ, and especially if these big tech names continue to rally, guys, because we know at this point that's kind of what's holding up this market and continuing to push this market up is these big names like Apple, Amazon, Facebook, Google. A lot of these companies have been doing quite well recently, and Amazon is almost at an all-time high, just to give you guys some perspective. And mind you, these companies make roughly 20% of the S&P 500. So overall, that's what the market is looking like when it comes to today. A pretty strong green day across the board. We're at very critical levels of resistance here on the S&P and the Dow and the NASDAQ as well. So if we break those levels, guys, from a technical perspective, there could be a lot more bullish action here in the market. So let's quickly talk about what I personally did in the markets today before we get into the meat of this video, going over a bunch of stocks that have reported earnings and that I'm watching here and looking to trade. So if you guys have been watching the channel, I've been preaching GDX. GDX is a gold miners ETF. This is an ETF that I have call options on, across different platforms. You guys saw in my Webull options video, I have one contract in that Webull account. So needless to say, I'm pretty bullish on GDX, obviously, because I have call options. And if you guys actually want to see kind of a rundown of options on Webull, there's a link down below in the description box, and you can also claim 2 free stocks from Webull, valued up to $1,400 if you put $100 into the platform, so you can use that. Also, link down below in the description if you guys want free money. But needless to say, I'm bullish on gold, and I'm bullish GDX here due to everything going on with the Fed printing money. I think a lot of people are going to flood, and they're already flooding over to gold. We're seeing all of these websites, these dealers that sell gold, their supply is very slim because many people are buying it. The demand at this point is through the roof. So that is kind of where the money is going. Obviously, other people are, there's other places where money is going, but a lot of money is going into these safe haven assets such as gold. So in the short term, I see a lot of potential in GDX, which really it's a way to kind of maximize your potential, or to put it in a different way, this is a way to kind of leverage the gain of gold, because if gold goes up, let's say $100, GDX is going to go up a lot more, just because, let's say gold goes up 1%, typically GDX does whatever, right, 5% in a day. It's not always correlated like that, but the miner stocks do better than what the actual price of gold increases, right, for the most part, from what I've been seeing here. So GDX, I ended up getting in at $34.15 this morning. And I've been saying in the videos, this general area, if we're able to break it, and I literally said this in the chat, I said this in yesterday's video, I believe, if we're able to break it, this thing is going to fly. And what do you know? It flew. We broke 34.10. I ended up getting in 34.15 on a limit order, and we rallied up to almost $35 per share. And I actually ended up getting out at $34.75. That's where I ended up getting filled. And at the end of the day, yeah, I left money on the table, but again, I still have options open that are making me money, that give me exposure to GDX moving forward. So that's what I ended up doing today, guys. Pretty much day trading GDX, and those options that I have are doing quite well at this point. And honestly, this is going to continue moving up, in my opinion, based on what we're seeing today. This is extremely bullish, guys. The fact that we broke 34.20, 34.40, two major levels of resistance, and the fact that we held them closing, into the close of the market today, that is absolutely huge. So take a look at GDX. Again, do your own research as always. Never buy or sell based off of my opinion, but watch out for it, as I do see a lot more potential in it. And NEM, which is Newmont, they reported earnings today. Take a look at what they did. Go deeper into that for yourselves. But they're up about 3.5%, and they are holding in the GDX ETF. So keep an eye on that for sure. So let me know down below in the comments, guys, thoughts on the market, what you're doing in terms of trading. Now let's talk about some of these stocks, these companies that are reporting earnings. The first one being Disney, guys, and we can see it's down a pretty substantial amount here after market hours, and on the day, it was down. It was down about 2%, and it's down another about 2-3% after hours. So in all, Disney is down about 5% on the day after they reported their earnings here after the bell. So let's get into what happened. So they reported earnings of, get this, guys, EPS 60 cents versus the 88 cents estimated. So they got crushed when it comes to the EPS side. Revenue actually beat. Revenue came in at $18.09 billion versus the $17.81 billion. And we know that their parks business is a massive chunk of their business. Massive. And with the whole CV thing going on, their parks being closed, that's impacting the company. So their parks experiences and products operating income is down 58% to $539 million, and that's 58% year over year. Quarter two parks experience and products sales down 10%. Not as bad, but still down 10% to $5.543 billion. And get this, guys, and this is probably one of the biggest reasons why the stock is down right now. They just cut their dividend. They cut their next semi-annual dividend payment, and if you guys didn't know, most dividend companies out there, and by the way, dividend is simply a cash payment a company gives out to the shareholders either quarterly or semi-annually or even annually, right? And most companies, they pay this quarterly, which means 4 times a year. But in Disney's case, they pay it twice a year, which is obviously semi-annually. So they're cutting the next payment, which is going to save them about $1.6 billion in cash. So at the end of the day, guys, that from a long-term perspective at this point, you have to realize if you're in Disney for the short term, okay, this will affect you negatively, I guess, because if you're buying, looking to swing trade, this news is bad. But if you're in it for the long term, you have to realize in certain situations, companies have to take measures to kind of keep afloat and to keep the business afloat in certain situations. And right now we're seeing a lot of uncertainty, obviously, so they just want to preserve this cash just in case they have to pay any unexpected expenses, they have to pay this, they have to pay that, right? So from a business perspective, I think it's a good move over the next couple of years. This is a good move right now because who knows, if they give this out in dividends and they need that money down the line, they need to take out a loan, whatever, this could be complicated. This could end up being more expensive and detrimental to the company. So even from a shareholder's perspective, Disney's dividend to begin with wasn't anything crazy. It was like 1%, if that, maybe even less than 1%. So the fact that they're cutting it I'm not, I'm not selling my position in Disney as I do own the stock, and I'm not really frustrated in it either. I think it's a good precaution here in the short term. Now, am I going to be loading the boat with Disney shares? No. Maybe if it gets back under $80, $70, I'd buy more, but at this point, I'm just holding my shares, guys, and from a trading perspective, I'm not too interested in, trading this, although if it does show some support at $100, maybe 102, maybe if it starts creeping back up there, maybe we could get a move back up to 105, 110. That's kind of what I'm looking for, but from a long-term perspective here, I'm just holding on to my shares, guys. I'm not really panicking from that. And another thing, a piece of information here from the earnings call, from the earnings report, 33.5 million Disney Plus subscribers. So that's pretty solid, as I'm sure the business in terms of people signing up for the service is growing at this point due to the quarantine, obviously due to more people staying at home. And another business that I didn't realize was reporting until they reported today is Activision Blizzard, ticker symbol ATVI. And this is a business that produces video games, which a lot of these video games are consumed on a daily basis by many people, and with the situation we're in now, the quarantine, they're obviously playing even more of these video games. And I'm a real-life example of this. And I don't know if it's a good thing or a bad thing, but I've been playing more video games from Activision, and in particular, the Call of Duty, the most recent Call of Duty. I've been back into it. I actually took a couple months off, but once this quarantine kicked in, the whole CV kicked in, I actually got back into Call of Duty, and again, that's a lot of people, so I can see why they're doing well here in the short term. And I don't even think I told you guys what their earnings were. Their earnings came in at 58 cents versus 38 cents estimated, and their revenue came in at $1.52 billion. And the stock, you guys can see, is up from $68.50 at the close today up to about $72.60. So that's pretty incredible there from Activision Blizzard. And of course, go into these companies, guys, and do more research. We can't possibly cover every single stat from the earnings reports here, but you guys can, pretty much, if you have ThinkOrSwim, you can go on the live news tab here and go to any stock and pretty much see all of the news minute by minute, whatever comes out in terms of the earnings call, numbers, news in general. It pops up, most of it, on the live news tab here, so make sure you take advantage of that if you are on the TOS, the ThinkOrSwim platform here. So the next stock they're actually reporting tomorrow is Shopify, ticker symbol SHOP, and would you take a look at that, guys? They broke above $700 per share today, $704 to be exact. That is incredible, and this goes to show, in a stock market recovery, whether or not the economy is recovering or not, because the stock market clearly moves on its own, and it's forward thinking, right? We all know that. But when we're seeing a recovery, we typically see companies that are fast growers, the growth stocks, recover a lot quicker and a lot larger in many cases than a lot of these value stocks, like let's say the Procter & Gamble's, the Cokes, the Pepsis, the J&J's of the world. And we can see over the past couple of weeks, guys, since this recovery, Shopify's gone from $300, the low 300s, $320, all the way up to $704. That's absolutely incredible. So in my opinion at this point, I need to see a cool down. I would love to see a cool down and maybe a retest at 660, maybe 665. And when it comes to trading, guys, a lot of the ordeal of being a trader is patience. Have price targets and be patient until they hit the price target. And sometimes, a lot of the times, guys, it doesn't ever hit the price target, and that's a scrapped trade at the end of the day. You move on to the next one or reformulate a new plan. But for me, I want to see it pull down to at least 660, 665 and see what it does from there. If we find some sort of support, and maybe we rally back up to 700 from there. And again, they report earnings tomorrow, so a lot of this is going to be based on the movement is going to be based on what their earnings are, their earnings. And SPCE, Virgin Galactic, also just reported. I was on their their conference call about 30 minutes to an hour ago prior to me filming this video, and nothing crazy came out in that call that, really shocked anybody, but the stock actually went up to $18.40, and that goes to show how crazy volatile this stock can be. SPCE is the ticker symbol, right? It went from $16.60 at the close. It touched almost $18.50. Now it's back down to about $17.20, so it's still up about 3%, 4% after hours, but at one point it was actually up almost 10%. So tomorrow, this could definitely be a flyer out there that really could move, because we've seen it move crazily when volume kicks in, guys. And you can see after hours here, we did get a nice volume spike as it pushed up to 1840. When we get that volume kick, SPCE flies, guys. So we have to keep an eye out on it. But when it comes to their earnings specifically, they didn't really make a lot of money. They actually lost a lot of money. They had a Q1 loss of $60 million. Their revenue came in at $238,000. Yes, you heard me right, guys. $238,000, and this was from engineering procedures. I'm not exactly sure what that entails, but that is what it said on the earnings call in the presentation. And their Q1 loss per share came in at 30 cents. I believe the analysts were expecting about 15 cents, so they missed a bit on there. But a really solid thing that I like about SPC at this point is they have about $430 million in cash on their balance sheet with zero debt. That's pretty solid. And we all know that, yeah, they're not making a lot of money now, but in the future, that is when they're looking to make the money, obviously, as people go on these flights and these space flights. That's kind of how they're going to make money in the future. That's what they're pitching to investors. That's their whole ordeal. Obviously, they do other things, but the main business here is space travel for humans. And at this point, they have 400 deposits that could equate to a future $100 million in revenue. Remember, these tickets, they're not cheap, guys. I'm not going on a flight anytime soon. The average Joe out there isn't, because these tickets to go on the flights, they're $250,000, which 400 deposits times 250,000 equates to about $100 million. That's how we come up with that future revenue. So there is a lot of money in future revenue, and the deposits are actually about $1,000 a piece. So they do have 400,000 in deposits at this point. But the thing is, when is this going to come into fruition? When are they going to send these people into flight? And once they do more test flights, we get more information of that. Kind of the timeline, that is where the stock is going to explode again. And they just had a test flight on Friday, successful, to New Mexico, the space station in New Mexico, and that is, really good for the stock. Obviously, the stock went up on the news. You guys can see it went from 16 up to about 18 in the matter of a couple of hours. So SPCE, definitely worth watching here in the short term. Another stock is going to be Square, ticker symbol SQ. This one, guys, I wish I had the crystal ball, because yesterday this one was at 60. It almost went up to $70 today. So in one day, this stock up about $10 per share. That's insane. This is a stock that really can run, any day. It can run a lot, guys. We've seen it in the past. So now that we really rallied above this $65 level of resistance, we broke it, we closed above it. I'm looking to see if Square can make a move to the 70s. That's kind of the next range, the next level that I'm looking for here, and that's what the charts are telling me. So honestly, I'd like to see some sort of support at about 65, 66, but honestly, guys, they're also reporting earnings, so I'm most likely going to wait after earnings before I take a position, because I never hold before earnings. That's not my style. I like buying after, kind of seeing what the guidance is, even though that might miss me out on money. That's okay, because I like playing it safe. I'm a bit more conservative when it comes to trading, and that's worked for me. It's worked for me over the years. I really can't complain. And their earnings report is on the 6th of May, which is tomorrow. And we have some companies, guys, that are very close to bankruptcy here. We got some news from NCLH, Norwegian Cruise Lines, that they're really on the verge of bankruptcy, guys. Their stock was down about 23% today on this news. And to take this quote directly from I think it was a CNBC article I was reading, the company warned it may have to seek bankruptcy protection, saying there is substantial doubt, quote unquote, substantial doubt, about its ability to rebound from the CV crisis. The company also announced it expects to report a loss for the quarter ended March 31st and on the year, and they also report earnings, I believe, tomorrow or on the 7th of May. So in terms of a short, maybe playing put options, shorting the stock, I think NCLH could be an awesome opportunity here. CCL, Carnival Cruise Line, another big player in the cruise line industry, down about 9% today as well. So these cruise line stocks, guys, they're slowly becoming under heat again, although CCL is a bit more bankruptcy proof, I'd say, than Norwegian. It's still under pressure, I think, guys, both of them. And another company under pressure here is Hertz. They actually got some pretty bad news, obviously, because they're at the risk of bankruptcy. I think they were going to file this week, but they actually got a last-second agreement with lenders that allowed the company more time to rework its debt and extended a grace period for the payments it has recently missed. And while the lifeline is welcomed by Hertz, the forbearances allowed by lenders give the rental company only until, get this, guys, May 22nd, 2020 to develop a strategy that better reflects the economic impact of the CV, the global obviously crisis that's going on at this point. So Hertz could very well be at its last whim at this point, its last leg, as it's the 5th of May right now. They have until the 22nd of May, and the stock's already down about 16% today, down into the $3 level. You know, this is going to be one worth watching, as, you know, their whole business is around used car vehicles. And I was reading used car vehicles at this point, guys, they're losing their value, and as they're losing their value, less people, obviously no people pretty much, are renting cars. They're just losing money hand over fist. They're just losing to the point where, you know, they're insolvent, guys. They're not going to be able to pay back their debts, and that's kind of where it is at this point. Ticker symbol HTZ. And to finish it off, guys, Tesla stock today did absolutely bananas. It was pretty crazy. Actually, am I making that up? Earlier in the day, it was up a lot. It was almost at $800. So earlier in the day, it was doing very well. You know, it was up about 5%, but now you guys can see it's pulling down into the close of the market and after hours. So I'm thinking, guys, Tesla can see its next leg up if we end up breaking above that 800 level. That 800 level is kind of a huge barrier at this point. So keep an eye there. If we do break, this could fill up to 820, and who knows, as we're getting the battery day at the end of this month of May at this point, as long as it doesn't get rescheduled, you know, this could bring more hype to the stock to push it to 850, 890, 900. So just watch out in the short term here what direction it does end up picking. So if you guys enjoyed this video, as always, hit that like button for me. I hope you did find some value in it. Let me know in the comments, what are your thoughts on the markets in general? thoughts on trading, investing. I'd love to know where your head is at. And feel free to subscribe to the channel if you haven't done so already and claim your 2 free stocks from Webull valued up to $1,400 with a deposit of $100 into the account. That is linked down below in the description box. So I'll catch you all in the next video. Stay safe out there. I'll catch you guys. Peace out.